understanding why an investment goes up or down seems simple enough, but I can't tell you how many times I get approached by investors and they say, such and such stock went down. I don't know if it's a good idea to buy it anymore. It's fallen very quickly. And I turn around and I say to them, but do you understand why that stock went down? And it actually had nothing to do with the actual company itself. It had to do with a crisis somewhere in the world, or it had to do with perhaps interest rates moving higher, or the Federal Reserve saying something that the market didn't like, something that had nothing to do with that investment itself. And that investment falls in sympathy. And we know we've been through this many times before. We've seen crises before. We've seen the overall market fall only to come back stronger and better for years to come after the crises. So understanding why an investment goes down, probably more important than understanding why it goes up, because when an investment goes up, many people say, hey, I don't care why it went up. I made money. That's all I care about. But really understanding why something goes higher is important as well. You want to know, was it because it went up in sympathy with good earnings from another company in the same sector or category? Or did it go up based on its own merit? Is a stock going up because interest rates are falling and that's good for the overall stock market? And vice versa. Is it an investment going down because interest rates are going back higher? Because the Federal Reserve is saying they're not going to cut interest rates to the second half of this year. Maybe we'll see 1 or 2 cuts only when the market was expecting 4 or 5. So understanding why an investment goes up or down is extremely important. And I think my favorite chart of this show is a chart here, the history of recoveries. I think it's important for individual investors to see, and I'll read out some of them here. So underneath it has a bunch of crises. It has, for example, recession 1980. You could see that overall, it looks like market was down 27%. And then over the next 1, 5, and 10-year number, so the 1 is the blue, the 5 is the green, and the 10-year is the purple, you can see the big bounce back in those numbers. 1987, the one-day crash in October 1987, market dropped 33%, looks like. And then once again, you could see a sharp rise. And the 10-year looks like, with the exception of the Great Depression, the 10-year number after all these crises, so that's the purple column there, is well above what happened, I guess, 10 years prior. So what does that tell us? Well, it tells us that over the long term, and even over the short term, because most of the one-year numbers are significantly higher as well, the market bounces back. Individual investors look for these opportunities where the market can and will bounce back after a crisis. The second chart I have for this segment is just a simple chart on CIBC. And I show this because someone will say to me, Alan, why did my CIBC stock go down? It's got nothing to do with the United States or international markets. Most of its business is in Canada, although it has expanded a little bit in the United States recently over the last few years. But why is CIBC stock going down? And quick answer is, today, the way the markets work, not only can you just own CIBC stock on its own, but you can also own it in a managed product, an ETF, a mutual fund. And so what investors do when they need to sell something is they don't sell what they need to sell. They sell what they can sell. And so if you own a mutual fund or an ETF, it's an easy thing to sell. You're up on the name. You need to generate some money to cover a margin call or something. Market's going down. You're getting nervous. You sell the ETF. And by coincidence, maybe CIBC stock is in that ETF. Maybe CIBC stock is one of the names out of 50 names in a mutual fund. And so when you sell a managed product, unfortunately, you're also selling the names that make up that product. And so CIBC falls in sympathy. So again, understanding why an investment goes up or down is crucial before you make an investment decision. And don't always look at it as, oh my goodness, it's gone down 5%. Is that a name? It's looking a little, sketchy right now. Understand why it's down 5%. It may be a great buy opportunity for the future.